Can everyone see the screen?
Yes, sir.
Okay, cool. So this is about banking and financial services, Unit 4. Okay, in Unit 4, we are going to study about NBFCs, okay, about microfinance, leasing and hire purchase, and problems in evaluation of leasing and hire purchase. Okay. First, we'll start with NBFCs. Okay, till now, what we have discussed, we have actually this what do you say? This subject is very vast in the terms of the number of concepts involved. Okay, now because in the first and the second module, it was about banks. Okay, nothing else. How the bank operates, what are the kinds of bank, what are the roles and responsibilities, what are the assets and liabilities of banks, and many other functions of banks were there in the first and second module. In the third module, we dealt with this. This merchant banking and how an IPO is how an IPO goes about, how the companies approach the investment banks, what is a universal bank. All these we studied in third module. When in fifth module, it was very different. It was about credit rating. Okay, which are the companies who do ratings of other companies in the terms of credit, whether they will be able to pay the loans or pay back the loan easily. How is their credit worthiness of other companies? Okay, a manufacturing company approaching a credit rating company to give them a rating, so that if they approach a bank, the bank will easily give them loan. They need to analyze it. So the credit rating agency will analyze everything about the company, its financial strengths and other aspects, and then accordingly they will give a rating. So in credit rating, we have discussed that, which on which you have written your IA as well. Okay, and again in the fifth module, we had venture capital. Venture capital is when a person is starting a business. So during the idea generation to startup stage to middle level establishment of the business to high level establishment of a business, for till the company goes for an IPO. Till that time, how the funding happens and what are the stages of venture capital. So basically, venture capital is only dealt with the startups and initial stage of the business. Okay, so we did that, and afterwards in sixth module, we did about last time we did about the securitization of debt, in which the attendance was not that much, but that was an important concept. Securitization of debt, that means an illiquid fund with the loans which have been taken from the bank by the borrowers. That loan are the assets of the bank, but that loan cannot be sold to someone. So we are making an instrument wherein we are putting all the loans together, and we are distributing that loan into a security to investors. So investor will give money to them, to the bank. So bank will have enough money to give more loans. So that is what securitization of debt we did, and also what we did in fifth module. And that's all. That's all. So in Unit 4, we are covering NBFCs, microfinance, leasing, and hire purchase. Okay, I'll not take much of your time today. Okay, NBFCs and microfinance together, I'll try to complete, or else only NBFCs. Okay, maybe a half an hour lecture today. So, okay, so everyone is there. So I'll begin. Okay, NBFCs, for a formality, I'll read this. A non-banking finance company is a company registered under Companies Act 1956 and is engaged in the business of loans and advances, acquisition of shares, stocks, bonds, debentures, securities issued by the government or local authority, or other securities of the like marketable nature, leasing, hire purchase, insurance business, chit business, okay, and many other things. So we are dealing. Okay, so in this, till now, what we have studied about banks, banks is not a company. Okay, they are registered and they work as per the rulings of RBI. So Reserve Bank of India controls the banks. Okay, whether it is a private bank or a foreign bank or any other bank, they will have some of the other rules and regulations being followed, which is laid down by the RBI. Okay, they are not the companies. A bank cannot start another business wherein it does not involve any financial dealings, or a bank cannot start maybe a school or a college or any manufacturing plant or anything as such. So bank will only be doing the banking work. Okay, whereas this, which NBFCs, okay, this is not a bank. This is a company. Okay, a normal company registered under Companies Act 1956. Now it's 2013. Companies Act 2013 में एक normal company is registered. And why we call it as a finance company, a non-banking, okay, but a finance company क्यों बोलते हैं? Because 80% or 75 to 80% of its operations are related to financial transactions. It is not manufacturing or doing any other services. It is doing a financial services. Okay, so but it is not a bank. So a company who does financial services, most as in 75 to 80% of its business is related to financial services. Okay, but it is not a bank. So that company is called as a non-banking financial company or a non-banking financial institution. An institution which will be called as a non-banking financial institution or non-banking financial company. So we are going to talk about a company and not a bank. Okay, but this financial company and why it was established and what its role is, why it was established is when a normal person cannot borrow money from bank, okay, because he doesn't fit the criteria of borrowing. Okay, there are some criteria which due diligence which the bank does. We have studied that. Okay, his if he's a salaried person, this much should be his salary, this much should be so there are criteria for a salaried person. For a businessman, there are few criteria to get a loan. So if his loan is not getting approved, then he will face shortage of money for anything, for his business, for any other requirements. So when, and also bank does not get penetrate into each and every rural area. Nowadays it is there, okay, no doubt. RRBs are there, regional rural banks are there. But when banks were getting established, they were only concentrated in the urban areas. Rural areas where banks were not there. Okay, so the penetration of banks was not there, and also there are certain criteria which, if the person doesn't get fit into that criteria, he will not receive loan. So for that purpose, NBFCs were established. Okay, so they are different from bank, but they do similar kind of activity of the bank, which the bank also does. The similar kind of activity, where the difference comes is, a bank can accept deposits, okay, and gives loan. This is the basic function of a bank. And non-banking financial companies cannot collect a demand deposits. Demand deposits, if you remember, and they are the savings deposits and current deposits. Okay, we also called it as CASA. Okay. I'll write it here. Whenever you are hearing a term which says CASA, whenever you're hearing a term in the or you're reading the banking terminology or banking article, you will hear this term called as CASA deposit. Okay, this means current account and savings account. Okay, nothing fancy. Sif short form kiya hai, that's it. Current account, savings account, these are called as what? Demand deposits. Demand deposits, this non-banking financial company cannot keep. They can give loans to the other to businesses, to other people, okay, to start a small business or something, or any kind of loan they can give, advances they can give, but they cannot accept deposits. Okay, now the question will arise, how they will get the money. लोन देने के लिए उनके पास कहाँ से पैसा आ रहा है? ठीक है, they borrow loan from the bank. Okay, so borrow money from the bank. So NBFCs, they are companies, they take loan from the bank, okay, and using that loan, they give a loan to these people, those who are not able to get money from the bank. Okay, so they can borrow loan. One of the type is they can borrow loan from the bank, Okay, that's how they'll get the money, or they can issue some commercial papers, or they can issue some what do you say securities, or they can issue stocks, bonds, anything. So that is how they raise money from the market. Okay, and also 100% FDI is also allowed in that. So FDI investments can be there. Okay, issue of bonds can be there, or they borrow money from the bank. So that's how they get money. Okay, and they give a short-term loans. They are not going to give generally when NBFCs were set up in 1991 and 1992, the RBI allowed NBFCs to open up. So, but they are not governed under the purview of RBI because it is a company, it's not a bank. So RBI rules and regulations are not applied for this NBFCs. So they give loans for short period of time. Suppose a small vendor is there who is setting up a ice cream shop. Okay, but he cannot get money from bank because he doesn't fit into the criteria. Then he will approach this NBFC. Okay, this NBFC will provide him a short-term loan for a period of 1 or 2 years. Okay, then he will repay it back. Okay, that's how NBFC helps in small businesses. They can NBFCs nowadays have grown much bigger because there was a credit crunch in 2008, 7, 8, and 2009. There was credit crunch. Matlab, the banks didn't have money to give loans, and they didn't have money basically banks. So NBFCs grew during that time. The NBFC helped in whatever we have studied. Underwriting, we have studied about underwriting during IPO. The person who buys the stocks during IPO and then sell it in the secondary market. So NBFCs can act as an underwriter. They can help in mergers and acquisition. They can act as investment banks also. Okay, they can be an insurance company also. They can be a hedge funds. Okay, hedge funds. Yeah, you don't know it. It is somewhat similar to mutual funds. Okay, mutual funds wherein the small investors money put into mutual funds. But if person who have a lot of money, they will not put money into mutual fund. They will put money into hedge funds. Okay, hedge funds are the funds where the investment is very large, but it is kept very secret. Where the hedge fund investor is putting money, even the investor will not come to know. Yeah, hedge fund manager who is managing the money, he will invest in certain kind of securities wherein if market goes down, even then they will get profit. Like that kind of investment is there. Mutual fund mein kaisa, if market goes down, mutual fund will also slowly come down. Okay, but hedge fund mein kaisa, even if market comes down or market goes up, hedge fund will always be in a profit. So they will invest in that kind. So it is kept very secret. Okay, so non-banking financial companies can also act as hedge funds. Okay, so you understood what is the core which we are talking about, non-banking financial companies. Core kya hai? It is a company who is doing a financial activity, but it is not a bank. It is not governed by RBI. It cannot take the CASA deposit. It does not take current account and savings account. People cannot open that, and they cannot accept the demand deposits. People can invest in non-banking financial companies for a longer period of time, for maybe for a 10 years or something like that. Okay, and also how non-banking financial company raise capital. उनके पास कैसे पैसा आता है to give away the loans? They borrow from bank, okay, or they issue commercial papers in the market, or they issue bonds in the market, or some foreign fundings is also allowed in NBFCs. So this is how they get money, and they give small loans to a certain group of people or certain small vendors and the like. Okay, any doubts? Okay. So this is they can act like this. So they can act like this. They can act as investment banks, which we have done. Okay, mortgage lenders. Okay, they will have a collateral of that small shop, and they can lend money to that owner of that shop, like that. Money market mutual funds. Okay, it's a kind of a money market funds. It's a kind of a mutual fund, but it is there in the money market. ठीक है. जैसे कि in mutual funds we are mostly investing in equity market and debt market. Money market is kind of a debt market fund, but it is a short term requirement of liquidity. You don't have this in syllabus, just I have mentioned it. But money market is a short term requirement. Short term matlab kitna? 1 year, within 1 year. Okay, I guess I have explained this in some of the session. Money market is short term requirement, and the requirement is very huge. There can be a requirement of 500 crores or 1000 crores, like that requirement is there, but for just for 1 month or 2 months or 15 days or one night, that's it. आज मेरे को 500 crores दे दो, tomorrow I'll return 500 crores to you. So the interest rate is very high if we compare that, if we compare with the normal funds. Okay. And then insurance companies also, they can act, non-banking financial companies. Hedge funds, just I have told you. Private equity funds. Private equity funds are basically those type of investments and those type of companies who buys the entire company. Okay, suppose there is one company who is manufacturing watches, and that company is getting sick. That means the assets, and there is asset liability mismatch in that company. Okay, assets are very low and liabilities are very high. There is no demand for their watches, and that company is getting sick. Okay, so these kind of companies, the private equity funds, private equity companies, they find these kind of companies who are getting sick because of their financial management, and they buy the entire company. Mostly, okay, 100% equity or 80% equity. They buy the entire company, they restructure the company. Okay, they restructure the financials, they sell off the old assets and take care of the liabilities, and they streamline the company, and then they sell the company to other person who is there into that related business. ठीक है, तो प्राइवेट इक्विटी फंड जो है, these companies are not interested in that business, but they buy the business at a lesser cost, at a lesser price. They restructure the business, they make it very fancy. Okay, they balance it out, their financials and everything, and then they sell that company at a higher price. So this is how they get a profit. So this what non-NBFCs also act. Okay, again, these are out of syllabus, and the explanation of these are out of syllabus. Just remember this. Private equity funds, इसमें difference कैसा है? Private equity funds are buying the company who are not performing well. Okay, if we compare this private equity with venture capital कैसे था? Venture capital companies or venture capitalists will invest in companies who have a higher growth prospect, जिसका ग्रोथ अच्छा रहेगा, एंड वेंचर कैपिटल विल इन्वेस्ट इन द बिगिनिंग स्टेज. ओके, whereas private equity will invest in the later stage, and he will invest in, or he will buy that company who is not performing well. Okay, that is the major difference, because many of the times people get confused between private equity and venture capital. So private equity क्या है? The company who is investing in third class companies. Okay, and venture capital is investing company into first class companies who has a potential to grow. And private companies में generally it is 100% ownership. Private equity will buy the entire company, whereas venture capital will invest about certain part, maybe a 20% equity will he will take, or 50% equity he will take, 49% equity he will take. Okay, so like that, venture capital and private equity. So these are the non-banking financial companies, and there are some rules. Okay, what I have discussed, that is what is written. They can be promoters of utilization of savings, then provide easy and timely unusual credit to many people. They can act as financial supermarket. Okay, then investing of funds in productive purposes. Productive purposes, if small vendors are there, small shop owners are there who cannot find loans, who cannot borrow loans from the bank, then they help these NBFCs help them. Provide housing finance. Okay, DHFL, Diwan Housing Finance Limited, is one of the major NBFCs for providing housing finance. Okay, and then provide investment advice, increase in standard of living of the people. Okay, because they are helping the lower section of the society, so the lower section of the society will grow, because any economy to grow, so to promote growth of economy, we have accept deposits in various forms, but for long term, not for short term demand deposits nahi. So this NBFCs help in basically in the economic growth of the country, because whenever you want to grow a country, it is applicable for every country in the world. Whenever you want to grow a country, okay, you need to improve its lower section of the society. If lower section of the society, if there are less poor people, if the poor, say you are making them into middle class, lower middle class, upper middle class, so more the people in middle class, the more will be the growth of any country. Okay, there can be many rich people in the country, but the country may not grow, because only if, because as of India, last year, last semester I have told you, there is concentration of around 80% of the India's wealth with only less than 10% of Indians. So majorly the entire wealth of the country is with only few people. Okay, if that is the case, the country may not grow that fast. So if you want to grow a country, your lower section of the society should grow properly. So that's the reason NBFCs are encouraged after 1991, and after 2007 and 8, they got very big. So now NBFCs, you will find they are helping the big businesses as well, big shop owners as well. Okay, so that was about NBFCs. Yeah, that was about NBFCs. Okay, one more thing I want to tell you is asset liability mismatch. Okay, this is applicable for, and you should know it as a finance student. Again, uh, not that related to syllabus. But as of now, any doubts? ठीक है, शायद नहीं है, या है, या नहीं सुन रहे हैं, देखते हैं. ठीक है, shall I proceed? Okay, I'll just talk about asset liability mismatch, and then I'll close the session. Okay. ठीक है. Okay, we'll go to our method. Okay, I'm going to talk about asset and liability mismatch. This is what I'm going to discuss. Asset and liability mismatch of what? Of banks and of NBFCs. Okay, we'll take it together. Okay, first of all, what is an asset? What is an asset for a bank? Acha, chalo, now I should receive answer from you. Okay, what is an asset for bank?
Cash.
Okay, what is liability for a bank?
Deposits.
Hmm?
Deposits, sir.
क्या deposits? Yeah. अच्छा, first अभी let's say you have understood पूरा banking subject खत्म हो रहा है, ठीक है. Again I'll explain this. Asset मतलब अच्छा, basic meaning of liability is what? You are owing something to anyone. मतलब किसी को पैसा देना है, that is your liability. किसी को कुछ तो देना है, पैसा देना है, कुछ देना है, that is your liability. Asset is what you have, what is yours. Okay. For a company, asset is the fixed assets which the company has, the infrastructure, the land, building, machinery, plants, the cash which the company has. उसका खुद का cash है, cash equivalents, and the bills receivable जो आने वाला है पैसा. Okay, so that is everything is asset for a company. Liability क्या है? Bills जो payable है. Okay, shareholders का funds है जो shareholder को देना है. Okay, loans which they have taken from bank, वो bank को वापस देना है. So that is all liabilities for a company. ओके, बैंक्स का कैसा है? What banks need to give back? Banks need to give back the money if the depositors ask them. Depositor बोला मेरा पैसा मैंने deposit किया था, you need to pay me back. So that is a liability for a bank. That is correctly told. Okay, deposits is a liability for a bank. जो भी डिपॉजिट किया है, डिमांड डिपॉजिट्स है, करंट डिपॉजिट है, फिक्स डिपॉजिट है, जो भी डिपॉजिट जो भी है, एवरीथिंग इज अ लायबिलिटी फॉर अ बैंक बिकॉज कस्टमर कभी भी आके पूछ सकता है. व्हाट इज एन एसेट फॉर अ बैंक? द लोन्स, basically the loans which the bank is giving to the customer, that is an asset for a bank. Company और बैंक का यही this is the major difference where people get confused. What is an asset for a bank? Loan which they have given to the customers, to the companies, is the asset for a bank. Okay, because they will receive EMI payments every month, and that is how they will generate the profit. So loans and advances are the assets. Okay, deposits and other income, sorry, and the deposits, different type of deposits will be the liability. So asset and liability mismatch is what? Mismatch is matlab not matching. Okay, assets might be less or more, liabilities may be more or less, like that. Okay, so suppose bank has given, okay, suppose 10 crore के assets हैं, okay, बैंक के पास. This assets is what? Loans which they have given. This loan, ठीक है, they are given for maybe a period of 5 years. 5 year के लिए लोन दिया है, 10 crores का लोन है. ओके, जस्ट 5 year का एक ही लोन है. लायबिलिटी क्या है? वही, मे बी फॉर सिंप्लिसिटी, वही 10 crores which the people have kept deposits. सपोज ये 5 year का 10 crore का लोन है. When they will get 10 crore, मतलब मे बी 12 crore 5 years के बाद में मिलेगा एज ऑफ EMI. 10 crore लोन दिया है, रीपेमेंट इन द टर्म्स ऑफ EMI, इंटरेस्ट ऐड करके सपोज 12 crores होता है. बट व्हेन इट विल बी 12 crores आफ्टर 5 years, 5 साल के बाद में. डिपॉजिट्स अभी है 10 crores. पर्सन कैन एनी टाइम कम एंड आस्क मनी. ठीक है, डिमांड डिपॉजिट से कभी भी आके पूछ सकता है. सो दिस इज अ शॉर्ट टर्म लायबिलिटी. ठीक है, इफ इट इज नॉट अ फिक्स डिपॉजिट, इफ इट इज नॉर्मल डिमांड डिपॉजिट्स, सेविंग्स डिपॉजिट्स है, फीस भरना है, पैसा निकल रहा है, क्या कुछ खरीदना है, आई एम रिमूविंग मनी और आई एम ट्रांसफरिंग मनी टू समवन एल्स. सो दिस इज काइंड ऑफ अ शॉर्ट टर्म रिक्वायरमेंट, शॉर्ट टर्म लायबिलिटी है. और एसेट्स कौन सा है? ये लॉन्ग टर्म है, 5 years का है. So this is what asset and liability mismatch will get created. If your liabilities is short term and your assets are long term, if suppose everyone comes to ask for this 10 crore of their deposits, from where bank will give money? Bank will not have money. Bank नहीं बोल सकते हैं, you just wait for 5 years and we'll give you 10 crores. This demand, on demand, the cash should be available with the bank of the depositors. You're getting it? ठीक है. लायबिलिटीज है बैंक्स के पास में which are the deposits, and liabilities are short term. Okay, if those deposits are basically current account and savings account, CASA जो है, CASA deposits है, so they are short term. They can people can come and ask them. Okay, and if assets, they have given entire amount as loan, assets are long term, then there will be a mismatch. So the liabilities and assets should run in tandem. Otherwise, the bank has to arrange money from somewhere. Agar bank has kept less as fixed deposits and more of savings deposits, okay, and they are giving more loans, then it is a risk for a bank because they will not be able to cater to the liabilities because savings deposits zyada hai. So that's the reason when you go for a bank, you open an account and you become a regular customer, bank always stress you to keep fixed deposits. So fixed deposit rakha to definitely 5 years tak he will not ask me money. So for the period of 5 years I can easily give away that money as a loan. So asset liability mismatch nahi hoga. if more of savings deposits है तो plus interest भी देना है मेरे को savings deposits along with interest the person can anytime come and withdraw his amount. So that is a short term liability. उसको जैसे you have a term called as marketing myopia. This is a financial myopia. ठीक है, you have short term liabilities and you have long term assets. So then that will create an asset liability mismatch in a bank. So that's the reason RBI has told to keep as somewhere 9% है मेरे ख्याल से 9% as CRAR they called it, capital to risk asset ratio. Okay, and for NBFCs it is somewhere around 15%. So 15% का money they should keep aside. Banks का भी 9% money they should keep aside before giving a loan. This is just a suggestion. Okay, apart from CRR and SLR और सब होने के बाद में whatever loan they have given from that 9% should be kept aside as a safety. And for NBFCs it is 15%. Okay, so just know the basics. Your basics should be strong. That's it. Asset क्या है बैंक के? Immediately loans. Liabilities क्या है बैंक के? Immediately deposits. ठीक है, बाकी फर्नीचर और ये बिल्डिंग एवरीथिंग इज एसेट, बट द मेन एसेट फॉर अ बैंक इज लोन्स एंड एडवांसेस. लायबिलिटी फॉर अ बैंक, okay, it's deposits, demand deposits, fixed deposit. Even fixed deposit is a liability. After 5 years you need to pay them. Okay, so ये asset and liability का mismatch is when the term long term assets है या long term liabilities है, short term assets है, short term liabilities है. Because of that the mismatch has been created. Okay, so that is there in this. Okay, so this is that's it. I'm quite tired now. Okay, this is what we did about NBFCs. Okay, so NBFCs, how they are different? They are companies basically. They are not banks. They are companies. They are registered under Companies Act 1956 or 2013. They are companies. They are not banks. So they don't come under the purview of RBI. This is a company, so they don't come under the RBI's rules and regulations. But why they are called as financial companies? Because they are dealing their entire operations, their entire business model is catering to 75 to 80% of finance. So the example of NBFCs I can give is of Bajaj Finance. Or, sorry? Okay, so example for NBFCs can be considered as Bajaj Finance, Tata Capital, Muthoot Finance, Mahindra and Mahindra Finance, okay, L&T Finance. So whatever finance है next word or company के नाम पे, then it is a non-banking financial company. Why it is a non-banking? Because it doesn't do operations related to bank. Okay, taking off deposits and giving loans as bank does. So they can accept deposit, but for a longer period of time. But they can give loans easily. And how they raise money to give that loans? They borrow from bank itself at a lesser interest rate for a very long period of time. Okay, and bank gives them loan because bank feel they are very safe rather than giving individual loans. They take huge amount of loan at a lesser interest rate. So it's a kind of investment for a bank. So the bank gives a loan to NBFCs, and in turn NBFCs gives a small term loan, 3 months or 3 years or 2 years, like that loans they give, and this is how they do business. And some of the NBFCs which are involved, okay, investment banks, money market funds, insurance companies, now they can be called as a big NBFCs. Hedge funds, too big. Okay, and I have told you, in India, after 2007 and during 2007 and 9, these NBFCs got way bigger because there was a credit crunch in the bank. And why there was credit crunch in the bank? In the last class I have told you, because of that securitization. Okay, that ripple effect, the global economic crisis, everything what happened in 2008, there was credit crunch. So NBFCs grew during that time and became too big. So initially NBFCs were established for helping of small vendors and small farmers, and small shopkeepers. But now they have grown very big. So they have been involved in housing finance and car finance also. So some of the examples are Bajaj Finance, M&M, Muthoot Finance. And this is what the role of NBFCs are. Okay, so that's all for the day. Okay, anything you want to ask? No. Okay, shall I close the meeting? Okay, see you then.